All right. Let's also get your comment from Ajay Srivastava, particularly on financials. We spoke to him just earlier this week. Listen in.
If that kind of liquidity flows into any market, it doesn't matter how the economy is doing or not doing or whatever the things are. But the fact is, somebody is buying at the frantic pace that we are seeing. And I think on the other hand, I think it's a good idea for domestic investors to also encash and put some money in the bank, because the last time the index was at 13,000 plus, none of them encashed, and then the collapse happened, and then they ran through a major rough cycle. So I think it's a prudent strategy. It just depends upon your risk appetite and where the capital is. The global capital is available at 3% odd. So therefore you see the PE fund, everybody is leveraging like to the hilt. But for India, there is an important lesson, let's not get very ebullient about it, is inflation. Inflation is standing at the threshold. You saw the oil prices, $50 plus, Indian petrol prices, discounts are disappearing from the market for products, commodity prices, you saw Vedanta riding from where 90, 100 to 150 stock because of prices. So we are having a situation where I think it's a very, very bad news for savers. It's a wonderful news from equity investors today, but I think everybody tells us that savers are here for a big loss as inflation is going to climb. RBI said inflation is not the priority, so they are on their own with low interest rate products on FDs in the market, while the inflation is going to eat into. So good for equity, bad for investors and debt markets.
So what is good for equities? Let's talk about it. Assuming that moderate inflation is back, in the short term, the cyclical trade, which is buy metals, buy cement, buy industrials, is that trade back? Because if you're an entrepreneur, when you see visibility of demand and reasonable expectations of price uptick, you will start capex, and that's what has started.
I think so. You're right. I think your assessment is right. Even if it is, inflation adjusted is not so much, but the fact that optically the numbers will start to rise faster and faster in terms of inflation differential, I think it's a great news for the companies. And I keep saying that everything points toward the fact that the top 500,000 companies in India are going to gain a lot in terms of market share, access to capital, as well as now optically at least the sales line and the bottom line would start to go up at 10, 12, 15% growth would become a norm. If inflation is at 9, 10%, it's easy to believe that your EBITDA growth will be at 20% or thereabout. So suddenly when you have industries, everybody reporting 20, 25% growth in EBITDA, not the EBITDA percentages, that's a hell of a lot of number to chase, given the fact that you can raise capital today also at a reasonable price of 8 to 9% long term. And if you can get an EBITDA of 20%, asset to turnover even of 1, I think it's a great thing for any industry or any promoter to invest money.
When I look at social media, Twitter handles and the SMS I get, Ajay, I'm absolutely surprised with how everybody is so excited that ITC has gone higher. Last week ITC went to 215, 216, and suddenly everyone is saying, "Arey bola tha sasta hai, dekho value hai." What is your view on ITC? Would you pay importance to the ESG aspect, which is a big aspect for global investors, or you think ESG is something which is now priced in the current price of ITC?
Okay, one, the disclosure, we hold a fairly large position in ITC. To that extent, our views are colored towards what ITC looks like. See, ITC has suffered only for one reason. Is the management of the company, which has refused to understand economics, put money into destructive, absolutely asset like hotels, etc., which were an epitome to their own egos. I think that's where the company was run for egos of managing director, of the ex-managing director, unfortunately is no more with us, so I want to say more about that. But the fact is, hopefully, and that's what market expecting, ESG apart, we'll come to ESG. But the fact is, people are hoping that the new management, which is sitting there, will now listen to reason and start to taper down all the nonsensical expenditure they do, reward the shareholders, and build, and reasonably speaking, build scale back into the consumer sector, etc. So that's the fundamental expectation out of ITC. It is the cheapest stock by and large, if you after Vedanta perhaps, is the cheapest stock in the country on a fundamental basis with a good quality underlying businesses. So that's a fact. Now comes the ESG issue. See, ESG is just started. It's not the ending. The first time we're getting a flavor of what this thing can do to stocks of companies. And therefore, I would say that if they pursue this path, and they're the best place to pursue the path, unfortunately, tobacco, they can't do very much about it. But